Hey everyone, welcome to the Stoic Trading Psychology Podcast. I'm your host, Kevin, FX Telepath on YouTube. Today's episode is called Why You Can't Stick to Your Plan. And if you've ever told yourself, I'm going to wait for my setup, and then 5 minutes later, some news comes out or something and you take some random trade, this podcast, it might be for you. And that's completely fine. Everyone's been there, and you don't have to put yourself down. And, hopefully this podcast helps you learn to not make those mistakes. So I wanted to start off with the truth, and that is that most of us, we know what to do, right? We have our plan. The setup is there. At least I hope. Obviously, there are people who don't have a plan, don't have a trading plan. As somebody who runs a Discord group, I've definitely seen many people trading without a plan, and I've seen a lot of people trading with a plan. Most of the people in my group, at least, actually have some sort of a plan. So, and the setup is there, the risk management, it's set. But the second the market starts moving, emotions kick in, and then sometimes logic can really disappear. I'm sure you guys know what that's like. And you plan a clean entry at a demand zone or whatever you trade. I trade supply and demand. But then then price starts moving, and then you jump in early, or maybe you're day trading and you go upstairs to get a bite to eat or something, and then price comes down to an entry point that you didn't even notice before, and then you're chasing. And then maybe, you typically look for a 2-to-1, 3-to-1 risk reward. But since you chased after you missed the trade, that 2-to-1, 3-to-1 risk reward, maybe that turns into a 1-to-1. And then maybe with your win rate, that's not profitable. So, there's things like that you can do, and, it's not good, obviously. So that's what we need to fix as traders. And it's not a strategy when you do that. It's emotion. So we need to stick to our strategy as best as we can. So why does all this happen? Let's dive into it here a little bit. So discipline isn't about knowing what to do. It's about doing it when it's uncomfortable. And everyone knows what they should be doing, right? You wake up every day, you know that you should probably make your bed, you know that you should brush your teeth, and you know that you should probably hit the gym or work out. You know that you should, look for your proper trading setups. You know that, but there's a difference between knowing it and doing it. So, we all know what to do as traders and as human beings. And again, it's about doing it when it's uncomfortable to do. Like sometimes you don't want to work out and you just doing it. You end up doing it anyways because you're thinking about the long-term gains. And that's where a lot of the especially the beginner traders struggle. We can talk about how the reason that a lot of traders have FOMO and stuff is probably because of the way that trading is portrayed on social media, and that's very unfortunate. We can maybe get in touch with that on another episode. But anyways, you can be completely clear-headed when you're backtesting. You can be completely fine when you're looking at the charts. Oh, this was a great trade. When the market's closed, everything makes sense. You'll say, oh, I'm going to enter here tomorrow, and this is my stop loss. Maybe you're waiting for a nice 4-hour zone or something. I'll only trade this zone tomorrow. And then, you start to trade live, and it's like your brain short circuits. Why does that happen? Because trading is emotional at the end of the day. And at the end of the day, we are dealing with uncertainty. I know there's a lot of YouTube videos out there, especially if you're a beginner trader, where it's like a 95% win rate, how to make $100 a day. And, I wish it was that easy. Obviously, yeah, you can make $100 a day. You can make more than $100 a day, but you can also lose $100 a day. So at the end of the day, you're dealing with money and you're dealing with you. And that's why it's hard, and you're dealing with uncertainty. Remember, it is uncertainty. We are as traders, we are playing a probability game, right? You have a risk reward and you have your win rate. And at the end of the day, it is a probabilities game. So what is actually happening in your head when you're trading? Your brain has basically two parts fighting each other during a trade: your rational mind and then your emotional mind. And your rational mind is the one that made the trading plan, right? Maybe the night before, maybe 20 minutes ago or whatever. It's logical, it's patient, it understands the probabilities. But then your emotional mind, the part of your brain that's trying to survive, it reacts, it chases, and it avoids the pain. So when you see price moving fast or you take a loss, your emotional mind starts screaming, do something. And then that's when you start to chase the trade, or maybe you're already in the trade, and then your stop loss gets hit, and then well, actually, maybe you took your stop loss out rather, and then you're just keep moving your stop loss down. It's not good. And then the moment that your voice gets louder and then you break your plan, you enter early, revenge trade, you move your stops, and you look back, why the heck did I do that, right? And it's not because, it's not because you're stupid, right? You're not dumb. It's because we're human beings, and we are emotional beings. I've talked about it on my podcast before, and many of the members as well. Even as somebody who's been trading for 5 years, you still, if you win, you're like, perfect, let's go, right on. At this point, I'm not jumping around in my chair, and if I lose, I'm not punching my monitor, but you still have those emotions, and you can never really get rid of those emotions. You're still going to be happy when you win. You're going to be sad when you lose, and I've talked about it before, how you need to regulate those emotions. If you look at it like a line, you want to just go, when you win, yep, a little excitement, but then you're right back to square one, but right back to level-headed. If you lose, okay, you're a little upset, but right back to level-headed as soon as you can. That's what's really, really going to help you accept the losses. And then also, I've talked about it 100 times as well. It's easier to deal with losses when you're learning to trade when you have a good job. So I always tell people, if you want to learn how to trade, the thing I would do first is get the best job you can get to make as much money as you can while not trading, so that you can, 1, fund your trading account, 2, not be worried about, if you're profitable or not. And then 3, there's so many reasons to try to get the best job you can. Because at the end of the day, it might not work out as well, because some people aren't meant to be traders. They can't handle the losses. So, I'm just trying to be, one thing about me and my channel and, my whole brand, I guess you can call it, I hate calling it that, but I guess that's what it is. But, I try to be very honest, and I think that's pretty honest, trying to, just letting people know, you might not become a trader. It's very difficult, right? But if you just lower your expectations and you just take it slow, it definitely, will help. And anyways, let's move on. So we have fear, greed, and ego, and these are the 3 big reasons people break their plan. Fear, that shows up as FOMO. What if it runs out without me, right? That's the biggest one. I get asked all the time, what do we do if we miss the trade? Do you just hop in? No, I don't. Me personally, I trade at supply and demand zones. If you don't know what that is, like I said, check out my YouTube channel. I do a weekly Forex forecast every single Saturday. So you can get familiar with supply and demand trading, and tons of tip videos, a full course video on YouTube as well. So it's a great strategy, and it's definitely not the only profitable strategy out there, but it's a great strategy. So I definitely recommend checking out my YouTube channel if you have not yet. So I enter at demand and I enter at supply. If price comes in and just barely misses me, I don't chase price. I let my order stay there, or if different circumstances arise, and I'll remove my order. I don't chase. I don't do any of that. But a lot of people like to jump in early, or they don't let it hit your stop loss because they're scared to be wrong, right? So they just keep moving their stop loss, or maybe they don't even have a stop loss, which is just I'm sure there are strategies where you don't have a stop loss, maybe you hedge or something, but if you are a beginner trader listening to this podcast, always have a stop loss. Once you get better, maybe there's a strategy without a stop loss, but most good strategies have a stop loss. That's just my opinion. Like an actual set place in the market where, if that hits it, price will stop you out. When I lose a trade, it just hits my stop loss. I get notified on my phone, stop loss order filled, or take profit order filled. So anyways, there's greed as well. So you see little profit and then you want more. So then maybe you just keep bumping your take profit up, even though you should be getting out at the 3-to-1 because maybe there's a supply zone above. Or maybe you just randomly decide to risk more. Maybe you usually risk 1%, but maybe you're on a win streak. We've talked about it on the podcast before too. Losing streaks suck. They're really hard to get over. Obviously, it's a losing streak. It's terrible. I don't even have to explain that. And a win streak too. You get a win streak, and then all of a sudden it's like, oh, I've been risking 1%. I just had 5 trades in a row winning, right? So I'm up 5%. But if I was risking 2%, I could be up, 10%. So maybe I should risk more, right? And then you risk more. Maybe it's like 2 losses in a row. Now you're trying to get it back. Maybe you risk even more. And now you're in a lot of trouble, right? Especially if you lose a couple trades and you start risking more like that. So that's another thing you definitely do not want to be doing, and it all revolves around sticking to your plan, and that's definitely probably not in your plan. And your ego wants to be right. That's the biggest problem, right? With a lot of people, everyone wants to be right, right? I'll admit it myself, right? Everyone wants to be right. You don't want to be wrong, duh. So a lot of people will double down on losing trades, or they avoid, taking the stops like we've talked about, because they don't want to admit they're wrong. And the ego is something you cannot have in trading, right? You can't be winning a bunch of trades and being like, oh, I'm the best trader, and then you can't be doing that either, because you'll get humbled really quick. Trust me, I have been there. And all three of these, fear, greed, and ego, they will wreck a perfectly good trading plan. That's why people ask me for signals, right? Oh, why don't you do signals? I could, but the problem is if there's a signal and, like, let's say my take profit is at 5-1, that's a big move. And especially if it's on a 4-hour or a 1-hour time frame, which are the time frames that I enter on, that 4-hour trade, that could take a couple days in reality, like if it goes sideways for a bit, and maybe price goes all the way 4-1, 4.5-1, and then the way you manage the trade is differently, especially if you're new, right? You get emotional. Maybe price goes down and it would have hit your stop loss, but you removed it. I got stopped out. I lost 1%. You didn't. You removed your stop loss. Now you're down 5% all of a sudden, and then I'm not, right? So that's why signals don't really work, because in trading, there's fear, greed, and ego, and that'll destroy a perfectly good plan, a perfectly good signal service, or whatever you want to call it. So that's one reason I don't do that. But anyways, so we're gonna move on here, and we're gonna talk about identity versus impulse. A lot of people say that they're a disciplined trader, but every time they act from emotion, they're reinforcing the opposite identity, obviously. So what wins, your identity or your impulse? And if you haven't truly adopted the identity of a patient, rule-based trader, then your impulses will run the show. You kind of have to tell yourself I'm a disciplined trader. Of course, you have to say you're a disciplined trader, but you have to obviously do the things that make you disciplined, but you do also have to wake up every day saying, I'm a disciplined trader. I'm a rule-based trader. I am sticking to my rules. And if you don't, the market will obviously expose that. And I always tell my mentorship students, trading is a mirror. It shows who you are. And if you're undisciplined in life, that's going to bleed into the charts. That's why I always recommend working out, going on walks every day, just having like daily goals and starting the day doing things the right way, in my opinion. So it's if you're not disciplined in real life, you're not going to be disciplined in trading, and it won't work out for you. So, and we're going to talk about how environment plays a role as well, because your environment definitely influences behavior way more than people think. If you're trading with 10 tabs open, Discord chats running, music blasting, you got Twitter open, Facebook open, Instagram, Reels, whatever, to me that's chaos. So I get that some people are different. I mean, I do enjoy listening to music every now and then. If I was trading, I would listen to music, but that would probably be all I'd be doing, just listening to nice, calm music or something like that, and trading. And if you have a Discord chat open, that's fine, but you don't want to have, 100 groups open, 100 chats open, and 40 people are telling you to short the euro, and then 100 people are telling you to go long, right? You don't want that. You want to be kind of trading on your own, but if you have a group that you like, and that's fine, but you want to be trying to eliminate a lot of that noise. You do want to set up a calm environment. That'll only help you stick to your trading plan. I definitely don't recommend like Instagram Reels and TikTok and all that is like the most addicting stuff ever. I've definitely been there where I'm like scrolling all day, and it's not good. So again, it's we've talked about it before. You want to be disciplined in all aspects of life, and that definitely involves not going on your phone all day. The phone can definitely be addicting. I personally go on my phone a lot, but that's for YouTube. I usually I'm learning things on YouTube, and that, in my opinion, that's fine. But I definitely, if I ever find myself scrolling or something, I just kind of say, hey, what am I doing? Wasting time. I could be back testing or something like that, right? So you definitely want to set up a calm environment, guys. Just do it. Don't whatever music you like. If rap calms you down, whatever. I mean, that doesn't calm me down, but it's all personal taste, obviously. But yeah, you definitely don't want to have chaotic stuff going on. And let's say you have a girlfriend or a wife, and maybe you guys are arguing. Might not be the best time to trade, because you take one loss. Let's say you're day trading, you take one loss, and you're already mad about something in your personal life. That could really end in a disaster. So you might want to take a step back and just kind of relax for a second, right? So just saying, that's another thing to consider. If you're not in a good mood for whatever reason, maybe you shouldn't be trading, right? Especially if you lose, that could just, not end great, especially if the argument you guys were having was heated or something, right? So that's definitely another thing to consider. So here's a shift. So I'm kind of reading off of some notes here that I have, but here's a shift that'll help you stick to your plan. So stop measuring your success by the outcome of every trade. If you win, that's fine. If you had a plan where you said, I'm going to buy every day at 8:30 a.m. with my stop loss below the last daily low with my take profit at whatever strategy you want. Let's say that's your strategy, and then you went ahead and you bought when price hit a EMA instead. It's like a totally different plan and strategy. If you did that and then you won the trade, we shouldn't really be saying that's a good job. But congrats on the win. But it's not really, we're not going to measure that success by that outcome of that trade. That's just ridiculous. If that was your strategy, then perfect. So we got to start measuring it by whether or not you followed the plan, not whether it's a winning trade or not. Because a lot of times you could do something completely different and win. I've definitely been there. The truth is that sometimes bad trades win and then the good trades lose. I talked about it before in all of the courses that I do with supply and demand zones and stuff. A lot of the traders will say, oh, why did this zone fail? It's like such a good zone. I know a lot of you might not know what supply and demand zones are, but it's when we have a really, really strong move up or down. And then sometimes it's like the best move up or down ever. And then price comes back to the zone and it fails. And then they ask me why, and it's like, I don't know. I really, clearly demand wasn't that strong there, right? Or it was, and then maybe the banks didn't have the reason to buy there again. Maybe they want price to push lower, right? You just kind of think about it logically. And then also, everyone wants to always be like, oh, what did I do wrong in this trading setup here? Was this a bad trade? And a lot of the times, it might not be a bad trade. I'm at a point now in my trading career where I do have some sort of a journal. I'm not going to get into detail on it, but it's not like I'm analyzing every single trade. A lot of the times the trades I take, it's just a probabilities game. It was just a loss and a stream of winners and losers where hopefully I end up winning in the end. So it doesn't really the losses definitely don't bother me anymore at all. So ask yourself, did you stick to your plan? If you did, that's great, even if it's a loss, right? Don't worry if it's a win or not at first, right? Obviously, if you start to trade a plan, you back tested it and it worked, and then you go to trade it live, and then stick to your plan. Be proud that you stick to your plan after like 10, 15 trades. But if you have let's just say you have a 1-to-1 risk reward, your win rate, it has to be 50% to break even. So if you do have a 1-to-1 strategy and you take 15 trades and you win one, at that point, something's wrong with your quote unquote edge. Might not be working out, right? But if it's like a 1-to-1 strategy and your win rate right now is only 45%, so you are losing, but it's close to that break even, and you've been sticking to your plan, then that's awesome. Keep it up and then maybe start to identify patterns. Maybe, this zone didn't work the best when it was like this or something like that. Create a spreadsheet. Do whatever you got to do, right? Pen and paper. Figure out what works best. And, so that's what I would do. And stick to your plan. Again, I'm trying to just shove it down you guys' throats. So here's some more practical tips. So start journaling your emotions before and after trades if you want. That's not really something I ever did. That's kind of more of a day trading thing. If you're a swing trader, I've literally woken up to I've literally woken up in the morning, like this was recently, where I woke up to 2 notifications on my phone. Well, for some reason, my Awanda broker sends out 2 notifications. So if I get a limit order filled, it sends it twice. I don't know why, but anyways, let's just say 2 orders where I had my limit order filled and then my take profit filled as well. So I woke up to both of those within like 2 hours of each other. But that was at like, I don't even know, 3 a.m. I was like fast asleep. I'm in Canada in Eastern Standard Time Zone. So that trade happened during the London session. So, I don't really have any emotions during that trade. Whatever emotions I had was in my dream when I was sleeping. So, so you don't the emotions is more of a day trader thing. And guys, look, I've said it 1,000 times. It's so much easier to be a swing trader. Everyone wants to day trade because they see, I'm not even going to mention the names, but all these guys on YouTube who are day trading, they made 250 grand this past week or something, astronomical. Like to make 250 grand in a week trading, like for that to be you're not risking a lot. You got to have like a many $1 million account, right? So just remember that it seems too good to be true, might be too good to be true, but a lot of people want to day trade, especially beginner traders, because they think they can make money quicker and stuff like that. And I will agree with you. Obviously, if you have a strategy that works on a swing trading strategy, and maybe you only get 2 or 3 trades a week, that's great. You can definitely make money and be a profitable trader doing that. But if you could just do that on a 5-minute chart, maybe you could turn that 2 trades into, I don't know, maybe 10 trades a week, and you could, in theory, make more money. But then the problem with that is economic data comes out, it can spike price and take you out. It is a little bit of a different atmosphere, 100%, and then there's more pressure. It's quicker, so then your analysis might not be as good. It is definitely different. So you definitely, I don't know, day trading is more of an advanced thing, in my opinion. So if you are learning and you want to be a day trader, I highly recommend taking things slow, like I was saying earlier. Get the best job you can, make as much money as you can. Swing trade, because you can swing trade at work a lot of the times, right? Don't tell your boss, but a lot of times if you could wake up in the morning, I mean, it's perfect for the time zone I'm in, because I wake up pretty much before the New York session. So especially now, because I have a kid now, so I'm up before the New York session pretty much starts, kind of in the London session, I guess, at the end of it. Or whenever, I don't even know, I'm not 100%, I'm not a day trader, so I'm not familiar with the time zones, exact times or whatever. But anyways, there's been times where I have errands to do all day, so I wake up, set my orders as a swing trader, and the same thing, I get my limit order filled, and sometimes I get my limit order filled when I'm at Home Depot getting some things, and then next thing you know, I'm picking up some groceries. An hour and a half later, my stop loss order gets filled on that trade and I lose, or my take profit gets filled and I win, right? So it's better. You can do things. You can live your life. I don't want to sit in front of a computer all day. I don't mind sitting in front of a computer, talking to you guys, helping you guys out for a bit here and there, right? Obviously, but it's not, I want to be able to do things during the day, right? I like taking care of my yard, doing things like that. I'm probably a little bit older than a lot of people watching this. So I like doing those things. I'm not a big partier guy or anything like that. So, but even if you are a partier, you could be, before you party and you get drunk, you could place a trade with a limit order, stop loss, and take profit. It's way better than day trading. So maybe it's an unpopular opinion, but swing trading is where it's at. Like, picture you're older with kids and a wife or something, right? Do you want to be on the computer all day in the morning? Probably not. I mean, if you were really good and you had a really high win rate or something, and you're really good at it, then okay. But I mean, even here in Canada, one of the reasons I can't day trade is because my Awanda broker does not, for some reason, I can't get tight spreads. So I can't pay for it. It's ridiculous. So anyways, I also don't like the pressure of it. I'm not as good at day trading. So in theory, price is fractal, but day trading definitely harder. So please listen to me, especially if you're new. If you've been thinking about day trading, think about swing trading. If you think about day trading, is that what I said? I don't remember. If you have been day trading, think about swing trading. Okay. Anyways, moving on. When you feel the urge to break your plan, just pause and breathe for 10 seconds. I know that's like a cliche thing to say. I kind of hate when people say that to me too. Just pause and breathe. But I mean, it really works if you think about it, right? If you're about to explode on somebody because they said something wrong to you or somebody you love or something, pausing and breathing and thinking for 10 seconds might help you out. It might just calm you down, right? And then obviously the podcast is called the Stoic Trading Psychology Podcast, and one of my favorite Stoic philosophy principles is the concept of thinking about something that could happen before it happens, right? So, I don't know. Before you go into a trade, just think, hey, this trade could be a loser. It could literally fill me in the trade and stop me out within 20 seconds. And I just gotta accept that, right? So the Stoic idea of, I forget what it's actually called. There's a word for it, but you have to think about the worst that could happen going into everything in life and in trading. And it could definitely just help you so then you don't react too crazy because you're like, oh, right, this could happen, right? So it's hard to do that and think exactly the right things before, but I'm just saying there's ways to set yourself up for failure, right? Obviously you want to be successful, but you're kind of setting your mind up just in case it fails, and it just helps you not react on the spot and do something bad like revenge trade right away or something like that. And then again, if you are going to day trade, you probably want to set rules. You probably want to have rules that are generic rules. So if you're a day trader, you want to have probably generic rules where maybe I don't know, I'm just going to make something up. Maybe you only take 5 trades. Maybe you're entering on a 5-minute chart. You're only going to take 5 trades max. But if you win 2 trades, let's say if you're up 2% on the day, whether it's 2 trades or whatever that are winners, then you're done. If you're down 2%, then you're done as well. And then also, if you're down, if it's 5 trades and whatever, you're up 1%, you're down 1%, then you're done as well. So then you have a strict set of rules that you follow every single day. That's like your general rules. And then let's say 2 days in a row you had a bad, like you're following those rules exactly, you're doing really good, but you had a bad session where you literally, let's say it was like 2 losses in a row, you're down to 4% over the last 2 days. That third day you might want to have some rules set for that specific session. So maybe you stick to only 1 loss instead, or maybe you just to get a win under your belt, you could maybe risk a little bit less. It's not the best thing to do, but if you're gonna get upset, it is, in my opinion. It's kind of, a lot of people wouldn't agree, and I personally wouldn't do that. I wouldn't risk less because the next trade could be a winner and you need that win to make it up. I understand that, so don't hate on me for it, guys, but it's more of just, if you're going to really, really get mad if you lose another 1% or 2%, maybe you got to risk less just for like a week and get back into it, right? Like that extra week of recovery it might take from not risking 1% might be worth it to not, lose your mind if that's what's going to happen. So you might want to set individual rules before each session, depending on the last session, right? If you're coming off a bunch of winners, maybe you want to maybe if you just win 1, you might just want to cut it again because maybe, I don't know, maybe it just might make you feel better. I don't know. Experiment with different things. And then you could also practice by watching the market without trading it, especially if you're new and you haven't traded yet. We've talked about it before on the podcast where the paper trading, I don't really recommend it, but I do recommend it just only to kind of learn how to take a trade, if that makes sense. Like placing an order and stuff like that. I recommend doing that maybe for like a day or 2, just kind of getting the idea of it, like of placing an order and getting the idea of like, okay, I place a limit order down here and watching it get filled in just to get familiar with it. I do recommend that, but again, that's like for like a day, 2 days. You want to be risking real money as soon as you can, but you obviously don't want to be risking more than you can afford to lose. So a common mistake I see a lot of people do is they don't have a lot of money, and that's fine. I understand. That's why I always say, get a good job, get the best job you can, upgrade your job if you can. It makes trading easier. So what they do is they scrap up a couple $100, $300, and that's $300 isn't really a lot of money, right? They want to make thousands, like everyone wants to make thousands of dollars. So then they're risking a bunch of money with that $300, where in reality they should be treating that $300 like it's $300,000. So by risking 1%, and then that 1% is not going to be a lot of money that they're going to win. But the point when you're depositing money is you're trying to learn how to trade and stay in the game. You're not trying to make money at first. The money will just come once you learn the system. If you can risk 1% on a $300 account, make money for 6 months, deposit a bunch of more money, and then keep trading the exact same system with the risk reward and everything, you should end up doing well. But that's a big mistake I see a lot of traders, is depositing a small amount of money and risking a lot. If you're going to deposit that small amount of money, that's perfect. Risk 1% still, guys, please. You have to not only stay in the game, try to preserve that capital as well. And you are trying to learn to trade. You're not trying to just make a bunch of money at first. And the problem with trading is you can make a bunch of money at first, right? You can easily just place buy and do a huge trade, risk your entire account, and then make a bunch of money. You've seen it with Bitcoin and stuff like that. So that's the problem. And then people think that that's like a normal thing that's going to happen, and it's not. And I mean, there's so much content on social media. It's just so much gambling kind of thing. And now sports gambling is really popular. I guess it depends where you're from. I'm from Canada, North America, pretty much. So there's sports betting is everywhere now. So it's a big gambling atmosphere, and it seems like a lot of people in the gambling atmosphere are getting into trading because they think it's the same thing. And you can treat it like gambling 100%, but obviously you shouldn't. So don't gamble. We're trading. We're trying to play a probability game and stick to our plan. And a lot of times when we are in the group, we do Sunday Zoom sessions where basically we discuss the supply and demand trading strategy. And one thing about me is I don't have every zone on the chart. I do what I call it's the chain analysis for when a zone removes the opposing zone. I'm not going to get into detail and strategy here in the podcast. Again, if you want to learn more, you can check out the YouTube channel. But they'll say, oh, why isn't this a zone, Kevin? And this is not a zone over here. And it's like, you're right, it does appear to be a zone, but I don't have that zone because of my rules. And then what that does is it prevents me from over trading and then just trading every single zone. It just basically keeps it so I have that structure every single day and I know what I'm doing. It's easier on your mind too, right? It just makes it so much easier. I can do analysis all day, super quick and super easy. I might even make a YouTube video with that later. Anyways, trading. Remember, guys, trading is 90% waiting a lot of the times, right? The edge comes from waiting and then taking the setup. So waiting is a huge part of it. And then, whatever you got to do to preoccupy your mind, waiting, that's fine. For me, something that does preoccupy my mind, waiting for, 1 hour demand zone setups or supply zone setups is doing, the content and then, things like this podcast, right? And then obviously spending time with my family and stuff like that too. So I always recommend get outside too. So anyways, we are probably going to be wrapping up this podcast soon. It's been 30 minutes pretty much of me talking straight. So hope you guys are enjoying these podcasts. Make sure to check out the other episodes as well. We even have an interview trying to do more of these podcasts. So I would appreciate a positive review on whatever platform you're listening to this. Share with your friends. I would like to get more podcasts going, talk to traders, really try to help the trading community through the podcast industry, I guess, by just talking about psychology and kind of exposing not any individual people, but just kind of just talking about how, like, it's just not like the most popular channels on YouTube that talk about trading. They're not like, they're just strategy hopping, and I don't know, I'm not going to get into it. I'm not going to rip them apart, but they're selling you a dream, and it's like they're using their cars, and we can discuss where those cars come from and stuff, but they're using that to, psychologically manipulate people, especially beginner traders, into thinking, oh, it's so easy and this is what you're going to get. And in reality, it takes, it could take years. And, if you are in it for the long run, then you probably want to give me a subscribe and a follow, because again, I do the Forex forecast every single Saturday. I have that full course on YouTube as well, which has tons of great information. I really spend a lot of time on that. And especially that video. It's like an hour and 40-minute video. So I'm sure some of you guys are probably here from YouTube anyways. So if you are, I appreciate that. And again, if you guys want more in-depth information with the Sunday Zoom sessions where, we discuss the strategy specifically every Sunday. Check out the Diamond membership. It comes with that PDF full course document as well. It's 38 pages. It's amazing. So lots in that membership. So yeah, let me know what you guys think. I would love to, again, leave some feedback, but even just message me, say, hey, I like the podcast, Kev. Maybe you can talk about this or something, maybe a different topic or something like that. So guys, remember, stick to your trading plan. Okay, 100%. That's like the first step. It's really one of the easiest parts. It's kind of hard to find an edge, right? But sticking to your plan it's easy, but obviously it's hard. And if you haven't been doing it, great. That's okay. Do better tomorrow. Anyways, until next time, guys, I will see you in the next episode.